Welcome to Bloomberg Markets. I'm Bonnie Quinn. Let's get a quick check on those markets now at 12:30 Eastern. So as you can see, we have the S&P 500 higher. Goldman Sachs' David Kostin just out saying it's going to trade around the 6,000 mark in about a year's time after all of the election issues are out of the way. That's about a 5% move to the upside. We're seeing just a small amount of upside today, and that's even as we have great news out of China in terms of its economy and stimulus. That also has the Nasdaq powering higher by much more than the S&P, up about 0.5%, and that's thanks mainly to the Chinese stocks and some of those stocks that are benefiting from a potential stimulus to the China market. As you can see, the Golden Dragon Index up 7.2% today. Pinduoduo, the best performer in the Nasdaq 100, dramatically higher after China unveiled that broad package of stimulus measures, including cutting that key interest rate, the RRR, and lowering borrowing costs on mortgages. So let's take a look at some midday movers on the equity side, because don't forget, we did have the confidence data that also disappointed. So you had some US data offsetting some of the enthusiasm in the overnight session because of the China moves. So as you can see, Baidu up 5%, Alibaba up 5-6%, and Estee Lauder, Las Vegas Sands, many companies that would benefit from the move. Tencent Music, for example, up almost 15% in the day. And as I said, PDD Holdings or Pinduoduo up 10%. Nike itself also continuing that great streak, up about 1.25%, this continuing the move after Elliott Hill took over last week. So one more midday mover that we want to take note of, Visa shares falling on news the Department of Justice filing antitrust charges against the company. People familiar with the matter tell Bloomberg the DOJ plans to allege that Visa illegally monopolized the US debit card market. Attorney General Merrick Garland expected to announce the suit this afternoon at 2:30 New York time. For more on this now, let's bring in Bloomberg News reporter Sara Forden. She joins us live from Washington, D.C. So, Sarah, one of the issues is tokenization and those swipe fees. Explain more to us what we might hear later today.
Yes, so this is coming out of a years-long investigation into Visa's practices in the debit market. Visa is the largest payments provider in this market. And based on our sourcing, we're understanding that DOJ is going to be looking at agreements that Visa signed with other companies, including tech rivals, just to keep them out of the market, and also extremely onerous pricing penalties with merchants if they steered payments to any alternative debit networks.
Now, Sarah, we know that MasterCard had this issue. The FTC was basically accusing MasterCard of roughly the similar type of behavior that we're seeing Visa accused of by the DOJ. How will Visa defend itself, given that it has a bit of a precedent, albeit with a different regulator?
So our understanding is this is not a narrow case about tokenization, as they call that technology. This is a broad monopolization case looking at Visa's stronghold over the debit card market. And it's going to be a sweeping indictment as far as we understand. And this is going to be something that they're probably going to have to defend themselves against vigorously.
Several analysts saying that this has already been telegraphed and that Visa is very well prepared for this. Is there anything that might trip Visa up, Sarah?
Well, we'll have to wait and see the details that come out in the complaint that we're expecting to be filed later today. That will give us a lot more granular detail about what the Justice Department has found and what it's alleging.
Is there any reason to believe that should the election outcome change administration, for example, that there will be any change in the DOJ behavior?
I mean, this is a significant case that's coming out of years of investigating Visa's practices. This started when the Antitrust Division under a previous administration was looking at its proposed merger with Plaid. And so, obviously, we can't predict the future perfectly, but it seems like they have been building evidence over more than a decade. So it doesn't sound like it's something that would just go away with the change of an administration.
For sure, and Visa down about 4.2% now. Sarah, thank you so much. That's Sara Forden there with Bloomberg News in Washington, D.C. And staying in D.C. and its environs now, President Biden making his final speech in New York at the United Nations. In his address to the General Assembly, he spoke about how he sees challenges facing the world.
Many look at the world today and see difficulties. and react with despair. But I do not. I won't. As leaders, we don't have the luxury. I recognize the challenges from Ukraine to Gaza to Sudan and beyond. War, hunger, terrorism, brutality, record displacement of people, a climate crisis, democracy at risk.
Joining us now for more on Biden's remarks to the UN, let's go to Bloomberg Balance of Power anchor Kailey Leinz. So Kailey, it was the last address to the United Nations on the part of the president. What key takeaways did you get from his speech?
Well, Vonnie, in some ways, this is a swan song for President Biden, at least in terms of addressing global forums like the one at the UN General Assembly. We will not see him do this again as president of the United States. So in part, this was him making the case once again for his foreign policy doctrine, which is inclusive of shoring up U.S. alliances. Think NATO, of course, which has expanded during his administration with the addition of Sweden and Finland, and of course, the support ongoing for Ukraine. He did talk about that on the floor of the UN today ahead of his meeting with President Volodymyr Zelensky of Ukraine at the White House, which is expected on Thursday. Zelensky, of course, will also be meeting with Vice President Harris as he makes the case that that support for Ukraine needs to continue. As he noted in his speech, Putin has not yet been victorious in Ukraine, but he essentially was saying the support of alliances will be required to maintain Ukraine's ability to fight this war. Now, we do understand Zelensky, when he meets with President Biden later this week, is going to be pushing for a potential plan to end the war, which could include economic, military, diplomatic measures. He, of course, has been pushing this administration to allow the use of more longer-range weapons to strike Russia directly in its territory. So we could expect some development there. But in part, this speech was also not just about talking about his legacy, Biden's legacy, that is, but creating a contrast with those who could come after him, specifically, of course, Donald Trump, who on the debate stage earlier this month refused to even say whether or not he wanted Ukraine to win the war. Now, of course, this speech wasn't just about Ukraine. He waded into other waters as well, including what's happening in the Middle East as we see escalating tension on Israel's north border with Hezbollah and Lebanon. He said that no one wants to see further escalation in the region. He does still think a diplomatic solution is possible, but the ceasefire his administration has been pushing for to this point between Israel and Hamas still remains elusive, and things certainly are getting hotter in the region.
And of course, it probably goes without saying, but we do now have official confirmation that the White House is actually backing the short-term spending deal. Kailey, I guess this was expected, yeah?
Yeah, it's not a surprise. This is a 3-month continuing resolution that will avert the government shutdown that could have started when funding expires on September 30th. It will instead kick the can down the road to December 20th, maintaining the status quo in most areas while actually adding additional money to the Secret Service after the 2 failed assassination attempts on Donald Trump's life. I would just point out, though, as we have these conversations around regional tensions in the Middle East and in Eastern Europe and the ongoing war with Ukraine, it does raise the question of whether or not Congress might be getting into another supplemental funding battle in the near to medium term, as these wars could require continued U.S. support and potentially the release of more funding. We know that has been very difficult to actually get through Congress, and if they can't even figure out how to appropriate money spent domestically, it's a whole other battle to consider money that could be spent toward the aid of our allies.
For sure. Kailey, President Biden obviously addressing the UN and bilats with Secretary Guterres and so on today, but he also has to get back out on the campaign trail. What's on his agenda roughly for the next 6 weeks? Will we see a lot of him on the campaign trail?
We are expecting to see him visiting in a number of critical key swing states. We've already seen him making trips, for example, to the Midwest and states like Wisconsin and Michigan. We likely will expect to see him in Pennsylvania in the weeks ahead as well. That's, of course, as his vice president is doing the very same. She will be speaking in Pittsburgh tomorrow, specifically about the economy and manufacturing in the U.S. Donald Trump is speaking about manufacturing and his tax policy less than 1 hour from now. 1 p.m. Eastern time is when he's scheduled to speak in Savannah, Georgia. Both of those more catered, though, to the domestic audience. Messages around the economy, issues that affect people at their kitchen table and voters as they make these decisions. We do understand, based on consistent polling, that foreign policy doesn't weigh as heavily on the minds of the American voter as other issues. So what's happening at the United Nations General Assembly, perhaps not as critical to the actual outcome of the election. But what we do know, Vonnie, is the outcome of the election could have major influence on the forward conduct of U.S. foreign policy and the way in which the U.S. Interacts with both allies and adversaries alike.
For sure. Kailey, thank you so much. We'll be tuning into you later on. That is Bloomberg's Kailey Leinz live in Washington, D.C. President Biden also expected to make remarks later today at the Bloomberg Global Business Forum in New York, and we'll bring you those remarks live this afternoon. Coming up, we're taking a look at our stock of the hour. Smartsheet shares rising today on news of a buyout deal. A closer look at what's driving that price action next. This is Bloomberg. This is Bloomberg Markets. I'm Bonnie Quinn. Time now for our stock of the hour, Smartsheet. Negotiations to buy the company finally reaching the finish line. Blackstone and Vista equity partners have agreed to acquire the software provider for about $8.4 billion in one of the year's largest take-private deals. For more on this now, we're joined by Ryan Gould, who's been following the story. So yet another software provider in a take-private. What's going on in the industry that all of these software providers are having this happen to them?
Bonnie, it's the fifth largest public-to-private deal this year. I think this just really underscores the fact that private equity in particular still sees a lot of value in and around sort of public enterprise software companies. You'll see that even though we've had sort of S&P 500, the Dow bounce back to record highs, software companies in particular have been a little bit slower. That's because, they're more interest rate sensitive. As growth rates sort of get impacted, you kind of want interest rates to fall down and really help bolster performance and return metrics. But, I want to throw in as well, you mentioned Blackstone and Vista, but also the ADIA, the Abu Dhabi Investment Authority, is part of the consortium.
Yes, I did notice that, which is fascinating. They're obviously looking for opportunities as well, all around the world. What will private equity do with it now, though? I mean, it's already been used by 80% of Fortune 500 companies. How do you scale that?
I think one thing to think about with any sort of enterprise software, buyout, you'd be thinking about stripping out some cost. You just want to rationalize the cost base. And, one of the ways you can also do that is by thinking about the impact of AI. Any take private now involving a software company is thinking, how do we incorporate AI into our day-to-day? There are certain companies within enterprise software that have been particularly impacted by, the likes of ChatGPT, for instance. If you're in and around call center software, if you're in and around customer experience software. Smartsheet in particular, I think it's kind of clear that, that will be part of the equation for them. But, private equity clearly has a lot to do, and they have a sort of model playbook for this kind of deal.
Yes, I didn't want to mention sort of cost optimization, but it's likely there'll be layoffs. Also, Vista does have, interests in other software companies. Lucid, I think, is one. QuickBase. Might there perhaps be so-called synergies there?
There could be, and I think Vista is a great example. You mentioned a couple of their portfolio companies. They clearly know this space well, and to Blackstone's point as well, I think I just throw in that the combination of these two PE firms with great expertise, great operational experience. This is actually the third time this year that they partnered together. They did a deal earlier this year for Energy Exemplar, which is an energy data company, and they also partnered on the Cvent acquisition. I think Vista sold a stake to Blackstone there.
Does this tell us that private equity has to cast around a lot more now for opportunities? And also, what about the Abu Dhabi Investment Authority? Are they sort of looking more globally at other opportunities that they can get involved in, or how is that partnership working?
I think in general, just as we think about getting clarity on rates, and particularly as we think about moving through the election cycle and realizing that there's going to be much more clarity, private equity firms and strategic investors actually are thinking about where they can diversify, where are the opportunities. And enterprise software, even though growth, bouncing back to growth has been slower, it will get there. And by all data points suggest that 2025 is going to be a very active year for public SaaS companies.
All right, well, we look forward to speaking to you more in 2025 then. Our thanks to you. That is Bloomberg's Ryan Gould. And I do want to mention that we have some headlines coming out now about Elliott, of course, activist investor in Southwest Airlines. He has said that he intends to call a special meeting in the coming weeks. He has sent a second open letter now to fellow Southwest holders, saying that the meeting request may come as soon as next week, according to our reporting. Coming up, have commercial real estate prices reached a bottom? We're taking a closer look at recent data next. This is Bloomberg. This is Bloomberg Markets. I'm Bonnie Quinn. Buyers and sellers in U.S. commercial real estate are increasingly convinced that the market has reached a bottom. Prices down 19% from a peak in 2022, but up 3% this year. For more on what's next for this market, we're joined by Bloomberg's Abigail Doolittle and DWS Group co-global head of real estate, Todd Henderson. So Todd, it seems like there's more and more proliferation of stories about these REITs and so on that are actually improving so much over the last 12 months. A couple of them again on the Bloomberg today. Can we definitively say we've reached and passed rock bottom?
I think we can, Bonnie. I think what is different is that rates have the predictability of rates, and the short end of the curve, I think, is anchored rates on the longer end of the curve, which is how real estate typically prices. And so really what we can focus on now that this potential volatility in rates is behind us are just the underlying fundamentals and yields in real estate. And yields are higher than they've been in over a decade. And the fundamentals are pretty strong, and we think they're actually improving. So we like the dynamics in the market. Admittedly, the office market still struggles, but we're not sitting around thinking about how to be defensive in an office market. We're thinking much more about how to be offensive in the other major sectors.
So if you're really thinking about those opportunities, what sectors or even geographies do you like? Are you looking at in coming out of this difficult environment?
Yes. So we're focused on our two favorite sectors are the industrial sector and the residential sector. We also, though, like the shopping center sector, the necessity retail sector, which happens to have been the best performing sector over the last 2 years. Pricing didn't improve coming out of COVID because that was really ground zero for challenges in the operating markets. And so what we've seen is really strong performance in the operating fundamentals, vacancies higher than they've ever been, rents higher than they've ever been in the shopping center market. So we like that. But what we really like are the dynamics that are going on in the housing market as well as in the industrial market. Particularly supply, new starts, are down 75% year over year. That means that a year to 2 years from now, we're going to be undersupplied. And with demand fairly strong and the fundamentals of demand still strong, e-commerce, housing is too expensive, these rental rates, we think will grow from here. Demand will continue to grow and meet with that low supply.
So, it's interesting because I don't think you'll be surprised to hear that you're not the only person who likes industrial. You're not the only person who likes residential. In fact, I've heard there's so much dry powder on the sidelines, but there's actually not enough of the good sector, the good product that people want. Are you contending with that? Does that even create a bidding war?
Potentially, but a lot of that demand that would typically go to office has moved to what are called, the alternative or niche sectors. So they've moved to data centers, they've moved to self-storage, they've moved to single-family rental. So I still think there's enough product to go around. And let's not forget that we haven't raised as much capital in the real estate market over the last couple of years as we did in years past. So I think there's an opportunity here in the short to medium term to be able to compete, to be able to buy real estate at these higher yields, higher than they've been in a decade, and take advantage of the opportunities, the improving fundamentals that we see in the marketplace.
We sort of have a path for where interest rates are going, though, right, Todd? So why now? Why not wait a bit longer?
It's a good question. I think it boils down to what your risk appetite is, how many of these cycles you've actually been through. And the more cycles I think you go through, the earlier in the cycles you recognize the opportunities to get involved. I don't think necessarily waiting is going to be a bad idea. It's just going to cost you yield. There's a trade-off in terms of risk and return. The more risk you take here in the early recovery, I think you'll be rewarded for that through excess return.
So speaking of risks, one of the risks that we continue to hear about is this wall of CMBS that's out there, $1.5 trillion, extend and pretend this year, maybe because of the election. When does that come to play? Is it going to hit the regional banks? Is that going to create a continued liquidity issue, or do you think it's just going to sort of all work its way out?
I think the biggest challenge within the regional and local banks is their office exposure. But the office exposure across the banking industry, even in the regional and local banks, no more than 3% or so of their overall asset base. So given the capitalization of banks, which is much stronger than it was in the last downturn, which was more significant from an economy perspective, the banks are much more well capitalized and very capable of handling the distress in the office market. So we don't see there being a ton of distressed opportunities in the banks. What we do see as a result of the lack of regulation that maybe led to some of the challenges we saw in Silicon Valley Bank is increased regulation. And that increased regulation is changing the supply dynamics. The traditional providers of real estate credit, they're not there today, which provides an opportunity for private credit to come into that market. We're investing heavily in our private credit, private debt teams to be able to take advantage of that opportunity.
Now, that may be true, but the big banks and the insurance companies, from everything that we hear, that liquidity has totally gone away, and it seems that it would be tough for the private credit to replace all of that, and therefore some of the logjam. How do you think that works out? How can so much private credit come online to be able to fund what needs to be funded?
So what a lot of the banks are doing are providing back leverage. They're not directly providing leverage to the ultimate end users. They are providing back leverage to those private credit providers. So the credit or availability is still there. It's just being accessed differently than it has been in the past.
All right, fantastic conversation, and thanks to you both. That is Bloomberg's Abigail Doolittle, and of course Todd Henderson of DWS. Our thanks to you for coming into studio. I'm Bonnie Quinn. That does it for Bloomberg Markets. Let's just take a quick look at where we stand now as we head into the lunchtime hour. We have erased our gains for the Dow. The S&P still up about 0.2%. The Nasdaq up about 0.5%. I do want to point out that Nvidia had a pop around 11 a.m. and that's definitely helping the stocks and the Nasdaq 100 move higher. We also have gold at a record today as well, and Bitcoin unchanged right now, a weaker dollar index. This is Bloomberg.